Last year, I made a whopping £3,000 from my credit cards, which is not bad for practically no effort at all. What nobody tells you about credit cards, especially if you're somebody who is new to a credit card facility, is that they can often be a powerful tool if you use them correctly. But what you won't be taught is how they should be used correctly. The perks they throw at you, bonus points, cashback, airport lounges, Amazon vouchers, and so forth can really reel you in as a beginner. The harsh reality is that for a credit card beginner, it's the most dangerous yet vulnerable time. There are so many ways you can lose control that can have some long-term impacts affecting your financial future, such as getting a mortgage for your house or taking out a finance loan for your new car. Not only this, misusing your credit card could also see a big drop in your credit score and paying high interest on your debt every month. If you're new to this channel, hi, I'm Rajj The Finance Coach, a qualified accountant and finance architect. In this video, I'm going to break down the key things you need to be aware of if you are thinking of getting a credit card or if you are new to a credit card. By the end of this video, I will equip you with the right information, allowing you to make the right decision when it comes to getting a credit card. So let's credit crunch straight in. What is a credit card? A credit card allows you to pay for things on credit, which means you are using borrowed money to buy your new iPhone or pair of Gucci sneakers. It is so important to understand when you pay for anything with your credit card, no funds are released from your bank account. Instead, the bank that has issued your card has paid for this on your behalf with the agreement that you will settle the balance and pay them back in full at the end of every payment cycle. Whenever you apply for a credit card, they will assess your application by looking at your credit score and income before approving you for your first credit card. Their ultimate financial decision will come down to how confident they see you as a credit card holder, because they will assess how likely you can repay back that loan and how creditworthy you will be when issued credit to purchase things on. If you fail to repay back what you owe at the end of every month, you'll get charged a mind-blowing interest rate that you will simply want to avoid like the plague. How to choose the right credit card. You will scan the market for a credit card, and if you're like me, you will look for a credit card with the biggest reward offers. However, there is so much more you need to take into account. Please let me know in the comments if there is a particular credit card that you're thinking of getting, because I would love to know. But here are some of the 5 biggest areas you should explore, with the last one being probably one of the most important that you need to consider. Firstly, you will need to look at the annual fee charge. Many credit card companies will charge you an annual fee just to keep the card open. They may often run promotions and waive the first year's annual fee to attract new customers so that you can enjoy the rewards, and then later charge you that annual fee. As you scan the whole market, the best credit card for yourself, my personal advice would be to avoid credit cards with any annual fees attached. The main reason behind this is that your first credit card will have the most impact on your credit score. If you decide later down the line you no longer want to continue using that credit card for whatever reason, you will have to close the credit card. That will impact both your credit score and will end up absorbing an annual fee for a credit card that you will no longer want to keep, but to simply keep your credit score. Secondly, the annual percentage rate, known as APR. This is essentially the interest rate you pay on the money you've borrowed. If you do not clear the credit card balance, this high APR set by your provider will quite quickly compound, meaning that you will pay back more than what you borrowed from your credit card company. If you want to take full advantage of a credit card's rewards, some people won't even look at the credit card APRs that are charged, since they are paying off these every month and settling this balance. However, it's still important to have a good understanding of the APR applied on the credit card balances if you did not pay off a balance. The third thing I would consider and explore is the foreign transaction fees attached to the credit card. In this card, it will apply almost a 3% additional fee for purchases outside of the local currency when using your card overseas for spending. For those who travel overseas, this may be a critical determining factor, whereas for others, this may not be applicable. I guess this really does depend on your lifestyle and how often you plan to spend abroad. The fourth thing I would strongly consider is the bank that is issuing the credit card. I can generally say that this isn't something most people consider when deciding on a credit card, but it can ultimately play a crucial role and make or break your experience with the credit card. For example, Tier A banks offer some of the best credit cards or credit card experiences. To name a few, these include American Express, Chase, and Discover, whilst Tier B banks sit in between, They do not really stand out, but generally have a reliable service. So if you are thinking of applying for a credit card with, let's say, either Capital One, Barclays, Citi, Bank of America, or Wells Fargo, who sit under a Tier B bank, I can generally say you would be receiving a reliable level of service. Whilst Tier C banks are those that generally you would not entertain and have scored very low on a customer experience score. I have decided not to name and shame any of these Tier C banks, as I did not want to jeopardize their integrity. And lastly, rewards a credit card can offer can be by far the most important decision when you decide to take out a credit card. Not all credit cards will offer rewards, but for those credit cards that do, there's two types of rewards. The first type of reward system is a points or cashback system that you receive for spending money on your credit card. And the second is a signing up bonus or a tier style incentive for spending up to a particular amount to receive a complimentary companion voucher or traveling with a specific airline. Making a credit card application. So now you've decided on the credit card, you now need to make an online application. Most people find applying for a credit card can often become a very nervous experience because there's a list of checks the credit card company will need to complete before they approve you for your very first credit card. A credit card provider will also need to assess your credit history. If you have a weak credit score or no credit history, then it may be highly likely that you will be rejected for a credit card, which is what I faced when I applied for my first credit card many years ago. The application process is generally straightforward, and over the years it's became more simpler. You will find an apply now icon that you will need to click on, where you will be asked to fill out basic information about yourself. You may or may not get a decision straight away, and this can often result in an underwriter requiring further information to assess whether you will be eligible for this card. They may ask for your previous employment history. If you've only been working at your new workplace for a month or so, they'll require your previous employment history. If you're successfully approved for a credit card, there is usually some activation instructions for how to set up your credit card. Now, this is the most important point of them all, where you want to link your main bank account with your credit card so that it automatically pays off the full statement balance every month. The rule of thumb here is to pay off your full statement balance every month to avoid being charged interest or late payment fees. Paying off your credit card. You will see a term called your billing cycle. This, in its simplistic form, means if your billing cycle runs from, let's say, the 1st of June to 30th of June, on the last day of your billing cycle, so in this case, the 30th of June, you'll be sent a billing statement that breaks down and itemizes all your spend within that billing period cycle. Your credit card statement will have a payment due date specified that you need to make either a full payment or the minimum payment. Again, I cannot stress this enough that you should always make the full payment and settle your credit card balance on the payment due date. If you did only make the minimum payment, then this is the least amount you will need to pay to avoid the late payment fee charge. I call this the minimum payment trap. This option will always be available to you every month, but if you were to pay the minimum payment on a purchase of, let's say, 1,000 with an APR of 137.6, this would mean your iPhone would have ended up costing you around $2,376 after having that iPhone for a whole year. According to Forbes, research showed us last year that in the US, consumer credit card debt grew to $6,500. And what's scary is that this figure will rise since our cost of living has increased over the last 2 years. Credit card debt is becoming a global risk to general consumers, and once you're sucked into this type of credit card debt, you will find yourself sinking and drowning into debt that you cannot swim out of. So please don't put yourself into a situation like this and only buy something that you can currently afford without owning a credit card. The message that I really want to land with you is that your credit card should be used to your own advantage and used as a convenience to exploit rewards, not as a way to pay for things you cannot afford without receiving your next month's paycheck. You should always pay off your balance on your payment due date, and you should aim to automate this by setting up an automatic payment or a direct debit, linking your credit card to your main bank account so that you never miss a payment. You don't want to be hit with an insane APR interest rate. Even if you hold a credit card with an 0% APR interest rate, you should still follow the same principles and pay off your full balance. If you do apply for a credit card and get denied, please do not panic. People get denied more than often. It's nothing personal, and the credit card provider has the overall say. If this was ever to happen to you, there are so many other credit card options that could be more viable. This covers everything you need to know about getting your first credit card, and I hope you've enjoyed this video, and if you have, please don't forget to hit a like for this video. If you have any questions or want to know more information, please leave me a comment and I will get back to you as soon as I can. And lastly, please don't forget to subscribe to my channel, and I'll see you on the next one. Thank you.